you're very welcome to this video. And in this lesson we're going to learn today, we're going to find out about the principles of insurance. So, what are the principles of insurance? Best to think of it somewhat like the rules or the guiding principles that insurance is underpinned on. So these are basically the things that you have to follow when taking out insurance. So there's 5 of them altogether. The principle of insurable interest, the principle of indemnity, principle of utmost good faith, principle of subrogation, and the principle of contribution. So, what do all those mad words mean? Let's break them down. First one, insurable interest. Well, that basically means to insure something you must benefit from its existence and financially suffer from its loss. So in other words, when you owned it, you were better off having it. And now that you've lost it or broken it or stolen or whatever, you're now worse off. A good example of this was like, say, for example, if you insure your house, but you cannot insure your neighbour's house. So if your neighbour loses their house, if let's say your neighbour's house is robbed, you don't financially suffer from that at all. But if your house is robbed, yeah, you're going to obviously lose stuff out of that. You're going to suffer some sort of loss in that case. Second one there is indemnity. You cannot profit from insurance. So the whole idea of insurance is that you can only gain what you've actually lost, gain back what you've lost. So an example of this is if you insure your phone for €500 and let's say your phone, God forbid, gets lost or stolen or something to that effect, then the most that you're able to get back is the €500 value of the phone. Third one we're going to look at is utmost good faith. And think of the word good faith, being faithful, being a good, honest person. That's basically what this means. You must be fully honest when applying for insurance. So when you're filling in your proposal form, which is the application form for insurance, you need to tell the insurance company all the relevant facts. So for example, if let's say, for example, you're a smoker and you choose to smoke, then you don't declare that when you're filling in an application form or a proposal form for a health insurance policy. When you get sick from smoking, the insurance company aren't going to pay out because you would have to pay more for if you smoke because you are there for a higher risk because you're more than likely going to get sick. The fourth one we're going to look at now is subrogation. Subrogation is when the insurance company pays you compensation for the insured item. The ownership of the item passes to the insurance company. So once the compensation then is basically the payment you get for the insurance company when you've suffered a loss. So when you've got that payment, whatever was lost, damaged or stolen is now the property of the insurance company, so they can try and get some money back off it. Good example of this, think, is your car. Let's say, for example, you write your car off in an accident. Okay, in other words, it's damaged beyond repair. Then the insurance company will pay you compensation for you to get a new car. So they'll give you money, you can go off and buy a new car. And then the insurance company then own that damaged car. And they'll probably sell that for scrap or spare parts to try and make some money back off it. But the idea is that you can't get the compensation from the insurance company and then try and get the sale of scrap off it as well. And our last one, folks, is contribution. And this comes from the word contribute. In there. So that's basically when the same risk is insured with more than one insurance company. If this happens, the insurance companies will split the cost of the compensation, or in other words, they'll split the payout that they're going to give you. So let's say for some mad reason you decide to insure your house with 2 insurance companies and have 2 insurance policies on it. Well, if your house goes on fire, obviously you're going to be making a claim to recoup the losses that you've made in that event. However, you're not going to receive double compensation. Each insurance company will only pay you half the compensation, so you'll actually come out with the same amount if you're just insuring one person. So in other words, there is no point in insuring the same thing twice. So folks, they are the principles or the rules of insurance. If you have any questions, ask below in the comments. If you enjoyed the video, give it a like and of course subscribe to the channel. Thanks very much for watching, folks. See you in the next video. Bye now.